invitation to join you today. It's been a while since I've been down in Miami-Dade County, so it's always good to come back, see some familiar faces, and get to sit up here on a panel with some of my members of the association. My goal today is to try to give, as Jay said, sort of a 50,000 foot view of the national and statewide insurance market, and then let the practitioners talk to some of the very specific issues that they're dealing with on the retail side. To get started, I think it's important. There's a cross section of all sorts of different industries represented in this room, and whether you think about it or on a day-to-day basis or not, there's not an industry that isn't facilitated by insurance. Okay, insurance is really what makes and facilitates commerce, whether it be on the business side or whether it be from a personal standpoint, home and auto, life insurance, and so forth. So I think it's important to keep that in context, and the reason that I say that is because, and I was supposed to do a self-introduction, wasn't I?
Yes. we were going to catch you at some point there.
I'm Kyle Ulrich, President and CEO of the Florida Association of Insurance Agents. I've been at the association since 2004. Up until 2020, I did primarily government and political affairs, fundraising, and so forth. And then in September of 2020, I took over as president and CEO. And which is a great time to take over as president and CEO. 6 months into a pandemic and among the worst insurance markets in the history of the state of Florida. It's been awesome the last years. But nonetheless, it's great to be with you.
We started a wealth business 3 years ago. I feel your pain.
Right. So our association represents about 2,200 independent insurance agencies in the state of Florida. That accounts for about 20,000 licensed insurance professionals, plus another 5,000 to 10,000 support staff unlicensed folks. So it's a big industry. When I talk about an independent agent, the distinction I'm making there is that when you go to an independent agent, they're going to be able to offer you choices. They choose what companies they do business with. The other side of that is what's often referred to as a captive agent. That would be the best example of that is State Farm. If you walk into a State Farm agent's office, they can sell you State Farm, and State Farm. That's it. You go into an independent agency's office, they pick and choose what companies they want to do business with, those that work well within the industries that they specialize in, and they provide options to consumers, whether it be personal or commercial. So we have quite a few members here in the state of Florida. We're the largest state trade association for independent agents in the country. We're affiliated with the Independent Insurance Agents and Brokers of America. And so we end up having a very unique perspective on the marketplace because we represent so many agents that represent companies here in the Florida market and nationwide. As a result of being independent, they also end up representing the vast majority of insurance companies who write commercial insurance. So when you talk about a company like State Farm, who is a captive agent company, they specialize in personal lines, really. They don't do a lot of commercial lines. So as a result, our members facilitate the placement of commercial insurance for roughly 90% of the commercial market in the state of Florida. Okay, so that's just a little background about who I am, who I represent, and our members. And get back to the topic at hand. That every single business that you all represent here is facilitated by the placement of insurance. None of it happens without the placement of insurance. And so where are we? Where are we right now, both at a national level and where are we here in the state of Florida? So as many of you are probably well aware, we are in a cycle right now, and insurance is no different than probably most other industries, is that it's cyclical. There are times where you go through what's considered a hard market, sometimes you're going through a soft market. Hard market denotes that there's limited capacity in the marketplace, and as a result, prices tend to rise. And in a soft market, there's a lot more competition for companies who want to write that business. So naturally, because of that competition, prices go down. So we're at a time now where it's rapidly rising insurance premiums, both for commercial and residential or personal lines. And Since 2019, you know, unfortunately or fortunately, depending on how you look at it, the personal lines market tends to get most of the publicity, both from the media and members of the legislature, for that matter. And I know I've got a representative-elect sitting in front of me, so I'm going to be very careful about how I characterize some of these things.
We're good.
But you know, having been a lobbyist and representing the insurance industry for 18 years, there is just a hyper focus on personal lines insurance compared to commercial lines in Tallahassee, because that's what's viewed as the voter. Oftentimes don't recognize that, you know, business owners are voters too, and so, but it's sometimes lost in the conversation in Tallahassee. So where are we in the personal lines market? Well, since 2019, over 400,000 policies have been canceled as a result of insolvencies of insurance companies. So the company has simply gone out of business because they did not collect enough premium to be able to ultimately pay the claims and have been rendered insolvent by the state regulator, which is the Office of Insurance Regulation, led by the insurance commissioner. Since 2020, another roughly 200,000 policies have been canceled or non-renewed as a result of a regulatory order by the office allowing companies to get off of that business for the purposes of sort of risk mitigation, that they can no longer continue to write that business. If they did, that company would be imperiled and potentially go insolvent. So that adds up to about 600,000 personal lines homeowners policies in the last 3 years that have been non-renewed or canceled either due to insolvency or done in order to keep a company solvent. So what does that represent? Well, it represents more than 10% of the policies in force in the state of Florida from a personal line standpoint. And that also doesn't take into account any policies that have been non-renewed or canceled just through the normal course of underwriting. You know, we have bankers and so forth here. You understand what the underwriting process is like for insurance companies. In order to mitigate their risk, many of them have had to take much stricter guidelines. They've had to reduce the home age, the age of the roof, you know, pipe, electrical, all of those sorts of things. And so that underwriting box has gotten much smaller, meaning that if there were 600,000 policyholders who have been canceled or non-renewed as a result of regulatory action, it's probably safe to assume that another 600,000 on top of that, well, that's 20 to 25% of the entire personal lines market in the state of Florida. So you all have always been in a very difficult area. You've been you're in an area here in Southeast Florida that is viewed as, by the industry, as you know, a very high risk area to catastrophe. But unfortunately, what we've seen over the last couple of years is much of what's going on is actually non-cat losses. It's, you know, replacement of roofs, it's water damage, it's those things that are much harder to price for. You can price for catastrophe. Insurance companies, modelers, and reinsurers feel like, you know, we have a handle on what that would cost. But with all of the non-cat losses, it's becoming more and more difficult for the industry to price for that. Citizens, you know, the state-run insurer that I'm sure many of you are familiar with, that's sort of a barometer of the health of the market. And so since middle of 2019, their policy count has gone from 420,000 to over 1 million policyholders. Okay, those are policyholders that could not find a voluntary market offer and have had to now go to the state-run insurer, which now with the state-run insurer, you are supposed to be getting less coverage. So those policyholders are now getting less coverage than was available to them in the market, oftentimes not getting the coverage that they really need to protect, in many cases, their largest asset. And in all likelihood, that policy count is going to continue to grow over time as the health of the voluntary market continues to decline. So, and then since 2016, the homeowners market here in Florida has lost $4 billion. Okay? Billion with a B. Since 2008. So going back, you know, another couple of years, they've lost 2.5 billion. So there was a point in time where the industry was profitable in the early 2010s. But looking over the last 14 years, the industry as a whole has lost $2.5 billion. You all are business owners, business people. you know that that is not sustainable. There is not a business model that works when you are losing $2.5 billion over a 12-year period or $4 billion over the last 8 seconds. So that's where we are right now. Talking about how we were going to characterize this and talking about a crisis. It's a crisis. There's no doubt about that. We also talked about whether we were going to have any PowerPoint presentations and stuff like that. We all agreed that we could just simply put a picture of a dumpster fire behind us, and that would suffice for any of the comments that we were going to make. So, I hate for this to come across as very negative and doom and gloom, but I think, the approach here is the right one. It's education, and then it's communication, and it's advocacy. You have to understand the problem first, and so that's what we're going to attempt to do today. Since 2017, the national market has begun to harden. It's not just Florida, so I'll talk nationally and then I'll drill down to Florida. So nationally, the market has hardened and it has gotten more difficult on both the personal and commercial line side. Why is that? So in that time, we've had hurricanes Harvey, Irma, Maria, Michael, Laura, Ida, Sally, Florence, Ian, and now Nicole. 2 weeks ago. Okay? So oftentimes you're here in Florida and you were unaffected by a storm, you don't realize this is a global marketplace that relies on capital primarily from Bermuda and London to reinsure this market. All of those things have an impact on availability and pricing of reinsurance in the state of Florida. What else happened? Well, we had a pandemic. Pandemic represented larger losses than 9/11 to the insurance industry. Not only did it represent larger losses to the industry than 9/11, it also led to supply chain issues that undoubtedly have increased the cost through inflation of goods and services. So your claim that, let's just say it was $10,000, any of you in the construction industry know what happened to construction prices, know what happened to material costs. What used to be a $10,000 claim is now a $20,000 claim. All of that is part of the issues that the industry is facing that were never priced for. They just weren't. Also had wildfires in California and Colorado, windstorms in the Midwest, and then of course, something that obviously matters a lot to the industry and to you all down here was the Surfside collapse. There are absolutely impacts of Surfside that are being felt on the insurance market and will continue to. Oftentimes we talk about legislative changes and so forth. When you have an issue like that, and you have a condo collapse, it didn't matter if the legislature did anything. There's so much talk about what the legislature can and will do, and it's all very important, but the industry was going to react whether the legislature did something or not. It is a business in which they have to price for risk, and if this now becomes apparent to an industry that there's a larger risk with some of these things that they are underwriting and trying to insure, then they are going to respond. And how are they going to respond? Well, at first, they're going to reduce capacity to the market to be able to step back and have a better idea of exactly what it is that they're underwriting. So Florida specific, and I know I'm probably getting a little long here. One of these pieces I'm going to move to the end.
And we will give you time at the end as well.
The politics of it, I think, will be better served maybe at the end with Q&A and after I let these folks kind of share. But in Florida, let's just talk about sort of the legal environment. And since 2012, we've had a series of events that have unfolded that have really led to where we are in Florida. You've got the assignment of benefits crisis, which that is something that has worked for 100 years in the health insurance space. You walk into the doctor, you're on a managed care, PPO, HMO plan, there's a negotiated rate that your doctor is going to charge your health insurer for whatever their services they're performing, and you never know anything about it. You don't ever get a bill, the insurance company pays it, it's done. There were some very creative attorneys back about 10 years ago who tried to apply that and did apply it to the property space, which there is no universal pricing. And it allowed them to step into the shoes of the homeowner and then ultimately avail themselves of Florida's one-way attorney fee statute that incents litigation. So, assignment of benefits was meant to be a self-executing system with no litigation. When you apply it to property insurance, it is actually fueled and incented litigation, which is why, at the moment, Florida has over 100,000 lawsuits a year relating to property insurance claims. The next highest state in the country is 1,200. Okay. 1,200. We have over 100,000 property insurance lawsuits in the state of Florida in 2020, 2021. The next closest state was 1,200. We represent 8% of the property insurance claims nationwide and 80% of the litigation in the entire country.
What was, I'm just curious, what was the 1,200, or what state was the 1,200?
Well, I'd have to go back.
Oh,
And
sorry.
if I had to guess,
Every
I'm.
other state. It's every other state.
Every other state is
Yeah.
And I'm curious, what is the law that changed recently?
You wanna do that
Go
now?
ahead, do that, and then we'll move
Okay.
on to our
So
round
the
table.
legislature has tried to address much of this in 3 separate occasions, 2019, 2021, and 2022 this year in a special session. All of those reforms revolved around trying to close loopholes in the assignment of benefits and also create sort of a sliding scale for how attorney's fees are awarded that puts some skin in the game. The way the one-way attorney fee statute in Florida works is that if you're a plaintiff and you sue your insurance company, you make a demand, let's say it's $20,000, the insurance company offers 10. If the jury or the judge offers $10,001, $1 more than the company was willing to pay, then all of the plaintiff's fees are paid. So in countless examples, you have disputes over relatively small amounts, maybe $10,000, where the attorney is actually recouping fees well in excess of $200,000, $300,000, $400,000, $500,000. Okay, so there's no disincentive for somebody to bring a suit against an insurance company because it doesn't matter. They're never going to pay their own attorney's fees because they're taken on a contingency fee basis.
But the idea of assigning the benefits, is that off the table now?
It has been very much curtailed, and they have defined what makes a valid assignment and what does not, that allows for consumers to get out of them. But no, it has not been done away with.
Did they take away the attorney's fee provision of it?
I'm sorry?
Did they take away the attorney's fee when it gets assigned?
So they have made changes to how they're awarded. So if there's an award within 20% of the company's offer, there's no fees pay, or they actually have to pay the insurance company fees. And there's a middle ground where it's, you pay your own fees, and then in excess of 50%, the fees are owed.
And I'll ask that we hold our questions for now, because we've got some great roundtable speakers. I want to be sure we can hear from all of them. I will say the ground rules are, if we're going to let you guys ask questions, we can ask questions of you too. So, thank you, Kyle. And Kyle will stick around, and he's going to make some closing comments, and he's not going to leave the table. He'll be here for this part as well. So we've got 3 insurance industry experts here. I'm going to ask each of them to do a brief self-introduction. The way I have structured this is we're going to first try to talk about what are things, if I am that homeowner, business owner, landlord, whatever, that I could do immediately when I walk out of this door today. What are things I could do later? What are things we can do to help right now? What are things we could do later? And then anything else they would like us to know that we haven't touched on. So we'll kind of follow that format loosely. I'll serve up questions sometimes to one of them. Doesn't mean that another one can't jump in, but we've tried to be sure we're hitting all our constituencies. And so we'll start ladies first. Sarah, if you could brief self-introduction, and then we'll introduce down the line, and then we'll start our roundtable discussion. So.
Good afternoon, my name is Sarah Washburn. I'm the president of Wilson Washburn and Forrester Insurance. We've been around for 60 years. We're predominantly a commercial agency where we create long-term partnerships with businesses where the decision maker is mostly around the Tri-County area, and we create these long-term relationships to act as a risk manager. So you may not be big enough to have your own risk manager on staff, but we kind of fill the need. We're an independent agency, which means we represent hundreds of companies. A few less these days, but that's one of the reasons why we're here. But we work to advocate for you as you place insurance either on your business or through a bank or however it is that the mechanics are working. We have specialties, which means that we are experts in certain industries. We are not generalists. So if you're a roofing company, we can't help you. But if you have a manufacturing organization or a distributor or a nonprofit, those are the areas that we kind of excel in. The reason why I'm here is because Jay complained to me about his homeowner's insurance 10 years ago, which we don't write, but it's fine. As we kind of got talking about this, you know, for us, there is an insurance crisis happening, but this isn't about us. We're just here to give you the options, to talk to you about the problem. The issue is for all of us. If we don't come up with a way to solve this issue, the economy stops in Florida. You will not be able to buy a house, you will not be able to buy a building, you will not be able to have commerce. And so we are trying to educate what we feel like was the smartest people in Miami, quite frankly, so that you can help us spread the word and get help. I will tell you that if you have a relationship with your insurance agent, you should give him a hug. My best advice there. Because for every time we're working, and don't yell at them. That's really bad. But we're working to advocate on behalf of our customers to the carriers. And that's the biggest thing that you have to understand. The same way that your accountant is dealing with the IRS or your lawyer is dealing with whatever legal matters, your insurance agents are also here to work through your renewals or to help you understand kind of what's going on in the current marketplace. So I'm going to talk a little bit more about kind of some tips and tricks for going forward, other than just increasing your insurance budget, which is going to be important, and we'll get into that in a few.
Thank you, Sarah.
Thank you. Good afternoon. My name is Scott Mesley. I'm Managing Principal at Epic Insurance Brokers up in Palm Beach County. And I've been in the insurance business since 2005. My focus is on highly successful individuals and families. So working with them on their personal insurance, their home, their auto, high excess limits. I graduated from Florida State University, whose football team recently visited this town. I think it was a good result. See, so I'm making the enemies. Everyone's trying to agree now. So I started an agency in 2006. I had worked for an agency prior to that. Post, I guess it was Wilma and the other 5 storms that hit the previous 2 years, and working claims and replacing clients that were with Poe Financial Group, who some of you might remember that name, that went out of business after Wilma and the many storms. So I got that experience and started an agency in 2006. Sold it in 2016, worked for a company up in Boca Raton, and then left that 2 years ago to work with Epic. I have my certified advisor of personal insurance through the Wharton School up in Pennsylvania. So I completed that, and I live in Palm Beach County with a wife and 2 kids. So looking forward, just like Sarah said, you know, it's a lot about relationships now. This is, you know, insurance, you see the commercials, it's transactional. At least that's the feel, but really it's a relationship business, and we'll talk more about that. But I look forward to meeting every one of you, and I appreciate this time, and thank you for allowing me to sit up here.
Thank you, Scott. Gary?
So my name is Gary Rashevsky, and I'm also here because Jay complained about his homeowner's insurance.
We didn't have a long enough table for all the people that I called.
So I know Conquerosson is Gator country, and so.
You got any deals though, Jay? Who was the cheapest one?
Anyway, so I'm a Hurricane, and I know this is Gator country here at Conquerosson, but you know, next to Seminole, and 3 Seminoles. Wow, it was a rough week.
It's the #1 risk management insurance school in the country.
We love recruiting from there, and it was amazing that it was the first time I think we were able to fill up Hard Rock Stadium 2 weeks ago for a football game when you guys were here. So that was amazing for the first half until everybody left.
Not everyone.
So anyway, similar to Sarah, we are an independent insurance firm based in South Florida, Miami, and Boca Raton. And my family's been in this business for a very long time, since the 1970s. We started our agency about 10 years ago again. and we focus on the middle market commercial business, property casualty, employee benefits. That's about 80% of our business, and 20% is helping successful families with their personal insurance needs, which both are challenging, commercial and personal. It's a very difficult market, and I want to thank Kyle for being here, and also ma'am you for being here today, because this is really important that we in Dade County understand what the issues are. So, the fact that Alfred and Jay put this on, I think is outstanding. In 2020, I picked up the phone in March or April, and I called Kyle's predecessor, and they take our calls right away. And I said, everybody's blowing us up because of this pandemic. Do I have insurance for this? My business is shut down, and we had to explain all of that to our clients what the issues were there. And thankfully, through all the bankers that are here, you kind of bailed us out with the PPP situation, so that helped the insurance industry immensely. Today we're at a similar crisis, and Kyle's here today, and he understands what's going on down here in South Florida. And our issues are unique to the rest of Florida, right? Our property values are as high as anywhere in the state. Our insurance premiums are as high as anywhere in the state. We're sending a lot of revenues, whether it be insurance taxes or just property taxes, up to Tallahassee. So our voice needs to be heard, and I think it's really important that the chamber gets the opportunity to understand the issues and can help Kyle out. Sarah called Kyle a month ago to say, can you come to this meeting? And I think it didn't take you very long no, she's very convincing. But he understood the issue, and he's here, and he flew in just for us for today, and I think that speaks volumes. So I look forward to answering some questions today with you guys and trying to figure out some solutions for what's going on.
Great, thank you, Gary. So let me first say, and you can take this as an endorsement if you want, all three of these firms, Kaufman Rawson has worked with in some professional capacity, so we have a comfort level with all three of the people that are here from a professional standpoint beyond their backgrounds. So, Sarah, I want to start with you. I'm a business owner. I've got a warehouse. I don't have a risk manager, and my renewal's coming up in however many weeks. I come to you. What should I be doing? Right now? What should I be doing?
Well, the first thing you should do is double your budget.
Double your budget.
Double your budget. That's the first thing you should do. So for our agency, and I'm sure it's the same with everyone here, but we're very proactive. So the important thing for us is getting in front of our customers, and if you're buying insurance, or whether you own the business, or you're the CFO, or you're the controller, it's to make sure that you have your pre-renewal meeting with your agent. To set up time, and I don't mean 15 minutes, and I don't mean a 20-minute Zoom meeting, but have a discussion with your insurance agent 4 to 5 months before your renewal, so that you can understand the impacts of what's happening. Why do I say double your budget? If you think about insurance, at least the commercial insurance side, and you think about the values of your buildings and the social inflation, your building values have gone up, so your premium's gonna go up. Now you're paying people more, so your workers' compensation's gonna go up. Your revenue's going up because everything in the supply chain is more expensive, so now your general liability is gonna go up. So we're having a crisis on the property side, but all of these things lead to increased premiums. So after you double your budget, you really want to look for an agent who specializes in what you do, who understands your business as much as you do. So we call it niche marketing. So we do 20 things really well at our agency. So like I said, if you're a roofer and you call me, I'm gonna tell you, I can't help you. There's a guy in Pompano, all he does is roofers. You should go talk to him. Because you can no longer be a generalist as an insurance agent. It's dead. It's something like, 50 years ago, you had general insurance agents. The other thing is, the idea of shopping your insurance is dead. That whole concept died because of the capacity issues. So there's probably only a few carriers that are gonna quote your insurance. So now you're gonna go to 2 agents, right? You're gonna come to me and Scott, or me and Gary, or whoever, whatever combination. we're both gonna put a submission together and explain your business to the marketplace. And those submissions are gonna be different. There's gonna be conflicts in our submissions, so the carriers are just gonna decline for both of us. So it's not the time to get 2 or 3 agents involved. It's the time to figure out if you have the right advocate sitting in front of you working on your insurance, because either way, it's going up. So you really have to trust whoever is sitting in front of you and understand the process that they're using. This whole concept of like, we're golfing every day, that's gone. There's no more golfing, right? So you want somebody who's really in the business, who's gonna work for you. Understanding your exposures, especially on the property insurance. If your roof is 20 years old, please do not file an insurance claim unless your building burns down. If your roof is 20 years old and it's wood, you have what we call a wear and tear issue. That is not an insurance event. You need to save for roof replacement. Same way you do it on your house, same way you change your tires on your car. So you really have to think about that concept. The whole idea of insurance is not for wear and tear. It's a big issue right now that we're having and part of this whole AOB. I do think that we should explain the concept of AOB a little bit in a different way, so that we can start to understand that. But so know your exposure. If you do replace your roof, you should keep your invoice, because for the first time in my experience in 20 years, not only do we have to tell the carrier that your roof is updated, we have to prove it. So you have to really keep good records. If you buy a building, it should be the first question you ask. When was this roof replaced? The other thing you should do when you're buying a building is have a conversation with your agent. Give them an idea of what you're buying. Give them time. People call me every day, I need a quote today. I'm like, today? You'll be lucky to have a quote in 3 weeks. But it's serious. We're holding up closings and deals aren't getting done. I'm sure you guys are feeling on the banking side because we can't produce insurance.
Absolutely.
We can't give you your insurance certificate. So if you're, I know that Gary's gonna address the bankers, but the timing of getting ahead of these closings is important. And really, it's spending time with your agent, having them understand your business, getting a good idea of the cost, having them look at it a different way, and making sure that you're getting good representation in the insurance market by a professional. That's the best thing that you can do. We are seeing really crazy increases, especially if on the property side the buildings are older, especially because we've had back-to-back storms in the last 4 to 6 weeks. The governor did issue a moratorium after Ian that really saved us because he extended all cancellations until 11/28. Am I saying that right? Cancellations? Until 11/28, so at least we got till the Sunday after Thanksgiving to replace all these policies. I'm not sure if anybody thought about that. We could have used 61 days. And so just the concept of really working at the insurance is important right now, more than ever. So that's my advice if you're a business owner. And also, again, hug your agent. Even though it seems like the premiums are just going up and we're making more commission, it doesn't exactly work that way, because for every policy that goes up, there's something else that we can't find coverage for because it just doesn't meet the criteria of being insurable in the current marketplace. So there's a lot going on.
Thank you. So, Gary, suppose I'm Hugo out here. I'm a credit officer for a bank. I'm making loans on commercial properties, residential properties. If they're a residential person like me, they're looking and realizing their deductible's over $100,000 on their windstorm coverage. The business owners are wheeling and dealing. The lenders are in there telling me, hey, I can't get deals closed. Hugo hires you and says, come in and tell me what I need to know right now about these coverages that are covering our properties as I'm watching hurricanes coming. What does Hugo need to know that he might not know today?
Well, the easy one I would tell you is flood insurance. A lot of people say, oh, I'm not in a flood zone, I don't need flood insurance. Well, I think like 30% of flood claims are people that are not in a flood zone. And it's much less expensive to buy flood insurance when you're not in a flood zone, or what's called a high-risk flood zone. So I encourage, some of the banks to start looking at that as an issue for people to require that insurance. It's much less expensive than the other parts of it. And probably hit on that, Scott, but it's something that is an easy one, right? The other thing, Hugo, that needs to focus on is understanding what your client's buying in terms of insurance nowadays. Where it used to be a few years ago, hey, I have a 2% windstorm deductible. Well, what we're seeing in the marketplace now is 15% windstorm deductibles on commercial property. And that 15%, some people don't even understand what 15% means. 15 is not like 15% of your premium or 15% of the limit, 15% of what your building's valued at, right? So what the replacement cost is.
Oh, it's not a
So yeah, and there's different definitions of what that is. It could be the cost of your building replaced, your content, and your rent all together to get to a percentage. So these numbers are very significant. So you own a portfolio of office buildings, maybe you're passing on the insurance cost, right, to your tenants. Well, what do you do when there's a deductible of 15%? You pass that on to your tenants. And I say to the bankers, maybe there's some products out there that you all ought to be thinking about for your borrowers to help them finance those deductibles when that happens, because what kind of reserves are there? And we learned that in Champlain Tower, someone done that. What kind of reserves? That's a whole other conversation, right? What kind of reserves buildings have? But these are significant numbers, and these deductibles are not going to go away for at least a few years until more capital comes into the market. These insurance companies are really trying to minimize their risk, and that's why these deductibles are getting to where they are. The other thing that's happening is capacity is very short. Why is that happening? Because there's not enough capital in the market I can go on for this, on the reinsurance side, to give the insurance companies enough capacity to insure everything. So what we're going to start to see now is someone who has a $100 million tower property insurance to cover their building or to cover multiple buildings is only going to be able to get $25 million of insurance. So the bank needs to understand that. Is that enough? Is that not enough? And then the client might say, that's all I can afford, and the broker saying that's all we can get. Those capacity issues haven't really started. They're going to start after January, when all the insurance companies go and get their reinsurance again. And there's going to be a very limited amount of insurance that they're going to be able to give to everybody on the commercial side. The other issue that is that I think is something that banks need to understand is not just the cost of deductibles, making sure people have adequate business interruption loss or business income loss to cover the income that may go away when you don't have tenants anymore after a loss. And that's also something that's going to be tight in the marketplace, and typically the deductibles are going to erode their ability to make those kinds of claims. So those are the big ones I think that need to be focused on by the banks.
Kyle, you want to add
Yeah, I was
something?
gonna say, just to jump in there, to two of the points that Gary made, I think are really important to make sure that everybody completely understands. The deductible one, there is so much misunderstanding about how that works, so let's just provide you a real simple explanation of that. If you have $1 million TIV, you're insured for $1 million, you have a 15% deductible, your deductible is $150,000 regardless of the size of the claim. So you're not getting paid for anything until the claim is in excess of $150,000. That's how that works. It's not percentage of the claim or premium or anything like that. It is the total insured value, and that's for both commercial and personal lines.
Yeah, but let's add more zeros to that. You have a $100 million tower here, and your deductible is now $15 million, right? Okay.
Yeah.
Yeah.
So
It's not insurance.
no, and it's
Why buy it?
as it relates to
Maybe
condos and
it's
stuff
a
like that, there's a lot of conversation about condos and reserving and all that sort of stuff, and the decisions that condo boards are making about their insurance and all of those sorts of things. I mean, it is a serious issue that I don't think many fully appreciate what the financial impact is to that association with the decisions that they are making and how they're structuring their insurance program. It's a zero-sum game. It's got to come from somewhere. And then the other part on flood, and I just want to piggyback on that a little bit because I just spent almost a week down in Southwest Florida, a couple weeks after Hurricane Ian, and there's this sort of talk about you're in a flood zone or you're not in a flood zone. I don't care where you live in the country, you're in a flood zone. It's a matter of what the government grades it as and whether the banks require it in a certain area. So many of the claims that resulted from Hurricane Ian, there is no coverage for many of those homeowners because they were outside of a high-risk flood zone. Their bank didn't require them to carry flood insurance. They said, well, why would I spend $500 on flood insurance? And now they have zero coverage whatsoever, and they're going to FEMA for a handout. Which, who pays for that? We all do. We all do. And so again, it's a zero-sum game. And we need to, I think, both as an industry and as a business community, have a better understanding of what the risk really is and where the money's coming from and what the real exposure is. Because whether it be citizens or whether it be FEMA, the National Flood Insurance Program, we're all on the hook for the cost for when somebody isn't covered properly.
I'll just make one more point, one more thing to add to the lenders that my firm's really focused on the last year or two is making sure tenants have insurance, because we want to get as much insurance as possible for our commercial clients. So when the tenants have insurance, there's just more pots of money to pay for a claim, to shift risk away from the landlord, from the lender, when there's someone else that will pay the liability claim because one of the tenants' customers came and caused a trip and fall, or whether the tenant did something negligent in their unit and caused water damage to the rest of the buildings. Being able to shift that is really important. So we've developed systems for our insurance to basically be able to track that. It's a lot of work for commercial clients to track all the tenants. So that's something that we've been doing at our firm to help them with that. So I think that's another thing I just want to mention to Hugo.
Yeah. And I guess as an extension of that, if you are the tenant, look at your lease and figure out how much gets passed on to you under that lease agreement. Is it something that the landlord's going to absorb it all this year, or is there going to be a piece you're going to get a bill for when the expense goes up? So thank you, Gary.
Can I just clarify one
Sure.
thing? When we get requests from banks for replacement cost values or loan values, there's really a misnomer about the loan value, right? As the insurance company who's standing behind all of us, they don't care what the loan value is. They care what the replacement cost of the structure is. So the banks need to get out. If you want to sell loan value, go to your forced place market, sell the loan value. But if you want real insurance for your customer to pay when there is a catastrophe, you need to look at the replacement cost values, especially now as everything's gone up on the construction side. So that's something that there needs to be some internal education on that piece on the bank side.
Thank you. So, Scott, I'm a homeowner. I'm in Coral Gables. Well, but hold
Triple
on.
your budget,
Hold
triple
on.
yours.
We're gonna increase the budget and all that, but we got all these things I can do, right? I get the 4-point inspection, I got the windows, I could get a new roof, I could get water detectors, other things that I'm not even mentioning. So I'm coming to you, hey, my policy's gonna come up in whatever time period is reasonable for me to do some things. What can and I should be doing as that homeowner to help be in a better place?
Well, I would say don't panic, first of all, because especially when we hear on the news and see and hear from neighbors and friends. Similar to some of Sarah's points, if you don't feel your agent is doing a good job for you, find one that will advocate for you. I look at when I work with clients, my job is to educate them and then let them make the best decision that they can for themselves. Because at the end of the day, it's their money and their insurance. I can only provide them their options and my advice and recommendations. So I'd say that's first of all, contact your agent, get your policy out, if you even know where your policy is, get a copy of it, and look through it. It's gonna look like hieroglyphics. You're gonna be reading it and you're gonna be like, what the heck is all this stuff? And I think now is the most important time to be educated on what you're buying, as well as strengthening that relationship with your agent. I think that's pretty key. As I said earlier, and as others have said, it's a relationship business. Because for us as agents, we have lots of clients, and the ones that are seeking to get that education, we're definitely going to provide that to them and help them along the way. definitely expect increases. Double, potentially triple your budget. But also when you're doing that education process with your agent, and if the agent's not providing that education, find one that will, and look at your options, whether it be deductible options, certain coverages within your policy. Mold is also big. We talk about catastrophes, but other than catastrophes, water damage claims are the single largest cause of loss across the country. We've had multiple clients, especially in condo buildings. I literally can show you a video of my office on Tuesday where a contractor on the floor above us hit a fire sprinkler, and it was literally raining in my office.
Oh.
Alex is here. It was bad. So those claims happen whether you're in condos, whether you're in your homes, and carriers are really looking at. They want to see those updates. Jay had mentioned, the wind mitigation form and the 4-point inspection. If you don't have those, I recommend getting those inspections done. They're usually good. Wind mitigation, unless it's more than 5 years, is usually good unless there's any material change in the house. And 4-point, it's usually good. 12 to 18 months, depending on the carrier. But I would get, if you're 6 months from your renewal, I would look to get a 4-point inspection and a wind mitigation inspection now, so that if there are deficiencies, you have time to make those corrections. Roofs are a big deal. Certain piping within homes is a big deal, because not only we're looking at the catastrophe claims, we're looking at the non-catastrophe claims, which has been a big deal, and hopefully we have a little bit of time to get into the assignment of benefits. But essentially, non-catastrophe claims in Florida have really exacerbated, those losses from insurance carriers that aren't accounted for. So, similar to the ECA, educate yourself on your policy, communicate with your agent, and if you aren't getting those, find someone that will advocate for you in doing that process. So it's very difficult, and I can also talk on lenders with homeowners coverage, either loan value or replacement cost. We're seeing replacement costs increase. I know some people have tried to reduce their coverage to lower their premium. Don't do that. That's just a terrible thing, because you're going to pay for it either on the front end or you're going to pay for it on the back end with a claim. And what we've seen, especially in Ian and somewhat in Nicole, is that people are not getting paid the value of what it will really cost them to rebuild. And buy flood insurance. If you're standing on the ground, you're standing in a flood zone. Simple as that. Doesn't matter if you're on top of a mountain or in the valley, you're in a flood zone. So it's just a matter of pricing, and the max coverage in the federal program is $250,000 on the dwelling and $100,000 on the content. So if you're right on the water, seek to get excess flood. That's huge, because it's not covered under a homeowner's policy.
Thank you. So I think from Scott, from our earlier conversation, I had a few takeaways too, that exponentially more likely to have a water claim than a theft claim. We run around, put locks on all the doors, alarms on the house, and we don't even think about the water part. So there's all types of devices out there that can monitor your water sensors and all these types of things, but we worry about the lock on the door.
In my 20 years of being in I've always lived in South Florida, but 20 years in the insurance industry, I've processed more water damage claims than hurricane claims.
Yeah. The other thing, when we talk about the 4-point inspection, part of my renewal, guy comes out to the 4-point inspection. He had to be 300 pounds. He did not get on the ladder. He did not go up in the attic. I don't know what the hell he looked at. And
I'm sorry, you want to continue his job?
yeah. But I went and got a new roof and then had another inspection. So my question was, are these like put in a database somewhere? Is there a record? If I don't like the fact that a guy showed up and didn't look at anything and then failed my roof, which he did, can I go get another one? And I think the answer is yes, I can go get another one. And it's not gaming the system, or it's not going to pop up on a database that we did too. And then of course all the things we talked about. Look, I had my house inspected multiple times over the years. There was a door that was a wooden door they never noticed before. Well, they notice it now, and I went and got that one replaced. Let's go to the assignment of benefits issue. Which one of you wants to, Kyle, you want to expand on that? Sarah?
I think it's a good jumping off point from, you know, the comments that were just made about, you know, water and some of the non-cat claims. You know, so much is made about catastrophes that, you know, Florida is prone to. The reason that we are in the situation that we are in right now is not because of catastrophic claims. It's because of non-cat claims. It's because of the exponential growth of both frequency and severity of non-catastrophic claims, whether it be water losses or whether it be roofs. That's just the way that it is. As a result of some of these, you know, nefarious folks who have created a cottage industry out of going door to door and telling you that you can get a new roof for no expense to you whatsoever, your insurance company will pay for it. All of those losses show up and are ultimately paid by every single person in this state. So it is the non-cat losses that are being driven by both a small number. I'm not going to throw, you know, an entire industry under the bus, both, you know, plaintiffs, attorneys, and contractors. It's a small number. I mean, there are 24 law firms in this state that are responsible for 90% of the property insurance litigation in this state.
Are any of them here?
No.
It is so lucrative that really the person who sort of started this, Harvey Cohen, I mean, literally goes around the state putting on seminars for contractors on how to word your assignment contracts in order to get into litigation with the insurance company. I mean, it is purposeful. That they are trying to create a dispute in order to get into litigation where it allows the contractor, roofer, water mitigation company to inflate the bill. They get paid more, and then the attorney ends up being able to bill hours and hours and hours and hours. I mean, they want to protract it. So, I mean, let's talk about the real impact to the consumer. Aside from the cost, and it is absolutely measurable that represented claims or claims that have an attorney that are now in dispute take on average 2 times longer to be able to settle than a claim that you work with your insurance company. There may be a dispute, you go back to your insurance company through an advocate that is an agent and say, hey, this isn't quite right, here's the documentation on why, you file a supplemental claim, and the insurance company pays it. That is not a foreign concept, although it has become this very sort of adversarial, and it's assumed by most consumers and or business owners that when I have an insurance claim, I'm not going to be paid what I'm due. And that's just simply not true. The facts don't bear that out. But the trial bar has done a very, very good job of creating this perception that the insurance industry is not going to help you at your greatest time of need. And so, you know, at the height of assignment of benefits sort of fraud, I will call it, there were companies like Citizens. We use Citizens as an example because all of their information and data is public. 50% of all of the claims that they received the first notice of loss at the same time they were handed a lawsuit. So, what does that mean? It means that the policyholder is telling them that we have a dispute at the same moment that they're telling them that there's a claim. That makes no sense whatsoever. And so all of that ends up bearing itself out because, you know, companies can only do that for so long. And you know, I've had people say to me, well, if you get the inflated claim and you know that you're maybe going to have to pay more through litigation, why not just pay $10,000 more? And then, you know, it's a good business decision. Well, because then you've just set a precedent and you've set a floor for where it goes from next time. So you can't. The insurance contract is a contract. The insurance company has promised to provide you a benefit of indemnification, and you have bought certain limits. You have responsibilities as a policyholder, and they're not in the business, just like all of you, of providing something outside of the contract. And so they have to litigate it. They have to fight it. Otherwise, it sets a precedent that, you know, means that you'll never price for it.
So I have a question, sorry.
So,
we have
so,
this-
I'm
oh,
sorry.
not allowed to
No, introduce yourself, who are you, and then your question.
Tammy Cabo Sanchez, a commercial executive for Regions Bank. So I have a question, if we have this data and we have, what can we do? And what kind of legislation can we get behind, you know what I'm saying, in order to make change and not continue to have these claims that continue to inflate a lot of it?
Good timing on that question.
Yeah, I mean, because I think really the latter part of this conversation was meant to be about the politics of insurance reform and what can you all do to try to impact decisions that are made in Tallahassee. And what I'll do is I'll go back to one of my first comments, and that is that for 18 years that I've been at FAI as part of the insurance industry, but representing agents, not companies. Insurance reform has been the job of the insurance industry. Why is it not the job of the entire business community, including all of you all who are here who are impacted by it? And I'm not, trying to throw anyone under the bus, but the Florida Bankers Association, the Florida Realtors, the Florida Builders Association, ooh, we don't want to have anything to do with y'all's fight with insurance. They don't want to do it because they view it as messy, and that's y'all's fight. Until the business community as a whole starts standing up and saying, this is having an impact on all of our businesses, we will continue to have nibbling at the edges and piecemeal reform that makes no difference whatsoever to all of you.
I just kind of add to that, Kyle. I mean, you asked a question about what laws were recently passed, and there was a special session earlier this year, and Sarah kind of tells it how it is, so I'll do that for a second, right? I was incredibly disappointed how much input was allowed to be put into that special session from other industries. It was really an insurance company bill, and we could have done more to fix some of these problems, the litigation problems specifically, right? But I think now that this election is over, there's a real opportunity to do something on the litigation, which is what everyone says is going to bring some capital back into the state. So that needs to happen. I hope it happens. So I hope everybody here supports what your trade groups and what Kyle's trade groups are trying to do to make that happen.
So let's take some other questions. Who else has a question? Please introduce yourself.
I'm Alex Peterson. I'm with Epic as well. I'm a managing principal at Boca. Question is for you, for FAI. There has been an endorsement that's come out that started in the excess and surplus line space and has now become part of the admitted space as well, specifically the exclusion of AOB. And there is pricing that is according to whether you have it or not. So does FAIA have a position regarding the exclusion of AOB?
So I'll give a little background. So when he talks about endorsement and exclusion, what he's talking about is an endorsement to an insurance policy that may exclude something. Makes sense, right? Got an endorsement to take something away. Perfect. This is why people just sort of roll their eyes when you start talking about insurance, because you could read that policy. You could pull that out of your drawer and read that policy, and it doesn't really matter until you get to the end when you read all of the endorsements on what was taken away 32 pages earlier and what was added to. So every single one of those endorsements and every single word in that contract has been gone through with a fine-tooth comb by the general counsels of every insurance company, trying to be as clear as they possibly can, but respond to ultimately what is something that was litigated. That there was some ambiguity in this word, and so some very smart attorney said, well, that word doesn't say what you meant it to say, and so we're going to sue you. So the point is that in the E&S market, excess and surplus lines market, as or non-admitted market, it's referred to in many different ways at times, plays a very important role in insurance here in Florida. What is that market? I mean, that market really is just a market that is not regulated by the state for either rate or form. Okay, so they don't regulate the coverage forms and they don't regulate the rate. They do have to comply with many of the requirements in Florida statute as far as claims handling and all of those sorts of things. So that gives E&S carriers or non-admitted carriers an awful lot more flexibility to tailor products to try to address issues in the marketplace. AOB, assignment of benefits, has been pervasive here in Florida, so what does the E&S market do? They provide an endorsement on their form that says this policy is not valid if you assign it to a third party. That's the contract. The purchaser had the ability to either buy that contract or not buy that contract. By virtue of buying it, they cannot assign that policy. That is not allowed by Florida statute on the admitted side. It is what many in the industry have been advocating for, to give companies the discretion that are regulated by the state to be able to file a form with the Office of Insurance Regulation and be able to exclude coverage if the assignment has been made. It requires a statutory change, and that has been a very, how do I want to describe this? Difficult, painful. There are many members of the legislature who do not agree with that.
Kyle, what's the argument against?
Yeah, and why?
What's the argument? Because it's anti-consumer. You're taking away a benefit that has been bestowed to the consumer for over 100 years of case law.
I mean, if you think about a claim, and even if you think about Ian, and you're over there, and let's just use like the little old lady for example, who's got the claim, and she's 80, and she lives 90, whatever it is, lives by herself. She has this water claim, the flood waters rush through, the bank didn't require flood, because she wasn't in a flood zone. And she's standing there and she doesn't know what to do, and somebody knocks on her door and they're like, oh, we're a restoration company, and we can fix all your problems. I mean, that's a good offer. And don't worry,
we'll deal directly with the insurance.
we're gonna handle your claim. And they're like, oh, great, I'm like yelling and stuff. Okay, here, oh, she's sweating, right? Because it's a flood and there's no power, and this hero is standing in front of her. This is what's happening. This is real. This is real. And they're like, you don't have to pay me anything. And I'm gonna fix all your problems. Here, you're gonna sign this. That's what AOB is.
Yeah.
You are assigning your policy to what I would consider maybe a criminal, somebody committing fraud. You don't know them. They just knocked on your door. Same thing with the roofers. I don't know how many people have had a roofer knock on your door and they're like, hey, I just fixed your neighbor's roof.
I noticed that you have a little fee, I can get that.
Yeah. I'll give you one other claims example that's real. It happened in May. I got a call on Saturday morning from a customer who said, I have a small fire in my warehouse. I said, oh, okay, that's not good. The fire isn't even out, okay? The fire department's there. I was working on a Saturday and I said, he had a fire. Let me just look at the policy and see if there's a claims number. So I put in a claim, which isn't something that I regularly do, but I was working, so it's fine. So the next day, Sunday, the claims adjuster calls me and he said, hey, I don't want to drive in traffic in Miami. Can we meet tomorrow on Sunday? Can we meet tomorrow at your customer's burned down building? And I said, yeah, that would be wonderful. I'm gonna go, you're gonna go, my customer's gonna be there. He's sweating, because it's hot. There's a fire. We get the guy there, he says, this looks bad, it was a bad claim, it was a very bad claim. The claims adjuster, music to everyone's ears, this looks like a total loss.
Of course.
That's a good thing in this situation, that the carrier's there the next day, and that they're saying this is a total loss. Right? Everybody agree? Okay. Monday morning, I get a call from my customer who's, emotional, and his whole family works there, and he's still sweating. And he says, oh, there's a guy here, a different adjuster, and he's gonna help me with the claim. Ooh. And I said, oh, that's so weird, because this guy that we met with yesterday, Tony, this is your field adjuster. The desk adjuster, the person at the carrier who sits there and types all the information, he's got a different name. I said, oh, why don't you just why don't you put him on the phone? So he gets on the phone to me, who, I'm a very straight shooter, and he says, I'm from such and such public adjusting company. And I went crazy. Why? Because no one even gave us a chance to work through the claim. The guy said yesterday, this is a total loss. So I said to the guy, you need to leave the premises now. If not, we're calling the police. And he said to me, I am going to stand across the street for the next 3 hours, 6 hours, however many hours, because all he saw was the dollar sign on my client's forehead. Now, 2 days ago, maybe sometime last week, we got word from the carrier that they're deeming it a total loss, so it took 6 months. But if he would have gone with that public adjuster, he would have had the same result in 2 years, minus whatever 10, 20, 30% fee that the guy was gonna collect. So that does not make logical sense. But he called me when the guy was there, and that's the only reason we kept that guy. The only reason. So,
It's happening repeatedly in Southwest Florida.
Oh, yeah.
Same situation right now. So, the public adjuster fees are capped statutorily after a catastrophe, 10%, okay? But what that homeowner, unbeknownst to them, although it's probably in the contract somewhere that they've signed at that moment of distress, before giving the insurance company an opportunity to adjust the claim, just gave away 10% of their claim. And then, when it's all resolved, the customer looks at the agent and looks at their company and says, well, this isn't enough to repair the damage. Well, yeah, you gave away 10% of your claim to this third party.
and you probably lowered your limit a
Right.
year ago.
And you're probably getting canceled or non-renewed from your carrier for hiring an adjuster, and good luck finding coverage. I swear we're not the
We have a
Mr.
question.
I
Okay, so Bob's got a question.
I'm gonna put the dark hat on, because Tanya trained me how to wear the dark hat situation. Yeah, the insurance company.
I'm sorry, introduce yourself, please.
I'm sorry, my name is Bob Fitzsimmons, I am a lawyer, I am on the side of defending the insurance companies, and to give you an idea, our firm grew about 25% just on what I call water world. Just all these claims against carriers, so that's my perspective, but, the insurance company, if you go to Citizens, your claim is gonna last and last and last, so there is other sides of the story, and I think the side you're describing has gone totally out of control. Because in our claims, we have hundreds, if not thousands of them. The amount of the damage is not the issue. The amount of the attorney's fee
Right.
is the issue. And we can never settle, because the longer the case lasts, the more the attorney's fees are. So this has to be controlled with something else. And I don't know what it is, but my question is, I've just talked to I was insured through the market, through Munich Re. Now, for a couple of years now, they were held off from canceling because of an election. Now it's over. And I'm back looking at a 30%, 40% increase, or my broker's going, maybe you should go to Citizens. So my question to you is, we understand the claim side of Citizens haven't defended them. They're gonna take a long time, you can't sue them for bad faith, so a lot of the stress on their side doesn't happen. Should we be looking at Citizens as an alternative that may be, 30% less, 40% less? What is your opinion of Citizens, as opposed to trying to go and get an actuarially sound premium for the risk of the
So that's a good question. At the end of the day, you need coverage in some capacity, whether that be through Citizens, whether that be through the open market, whether that be through excess and surplus lines carriers. In some cases, Citizens is the best option. Unfortunately, it's just the way it is right now. But what I would look at is, if we do have to place a client with Citizens, which is on a very rare basis, and I try to not do that as much as possible, we do have to add additional coverages, like just for example, their liability coverage is capped at $100,000. They'll only write up to $700,000 in replacement costs. Even if your home is replacement cost at $750,000 or $800,000, they won't insure it because it's beyond the $700,000. So yes, sometimes Citizens, for the million plus homeowners in Florida, Citizens is the best option, and that is a temporary solution. We then, will add additional coverages through other carriers to kind of build up that policy. I think, something that the state of Florida should ensure, and it's happening in California and other states, is what we call a difference in conditions policy, where you have your Citizens that is capped at certain limits, and then you have an additional policy that fills in a lot of the gaps or increases other coverages once the Citizens limits are exhausted.
Only way to go. Dissent is not part of the process anymore. It's not. Sorry, it's fact. And I'm somebody who for 18 years has been advocating before the legislature, and for me as an advocate who tries to look out for the best interest of my members, I actually have a leg up. because of term limits, because if I go talk to a brand newly elected member of the legislature, they don't have a clue. They have nothing. They have no knowledge, and not that they don't have an understanding of maybe some policy areas, but they have no historical perspective to rely on to say, hey, this decision that we made 12 years ago was the worst thing that we ever did to the market. And the bad ideas continue to be recycled. So, to your point, yes, I have been asked, many folks like me have been asked, do we have the opportunity to get real meaningful reform done in December that the state has been unable to do for years? Yes, we do.
Okay.
We have one more question and then we're gonna wrap up the labor.
I sure hope this is not being, recorded.
Totally. 100%.
Take that out.
You can buy this recording from me later.
And the lunch. Hey, I think your premium's going down.
So you had a question? Please introduce yourself.
Yes, Josie Correa with JWR Construction. And this is on the political side. Is there the political will within the legislature to go ahead and try to limit what attorneys' fees and things like that, or is that?
Yes.
Big time. Okay. So
Yeah,
that's an opportunity
we-
right there. I mean, I realize it's really hard. I worked for the Florida Retail Federation for a couple of years, and we tried to do a lot of that with other legislation, because obviously the trial bar is very strong, their lobby is very, very strong. But I think if there's a political will, and we're about to go into this session to discuss that, I mean, that has to be on the table.
So I will tell you that I'm not sure that you could point to, in the history of the United States, a governor of a state who has more political capital at the moment than
Yeah.
Ron DeSantis.
Yeah.
And if we can talk about the number of people who control decisions made in the House and Senate, but the truth is that Ron DeSantis controls what they decide to. And so the governor and many willing members of the legislature wanted to go further for years. And I'm gonna say this about somebody who I consider a close personal friend who my wife works for. It did not get done because Chris Rouse, the former Speaker of the House, would not allow it to happen.
That's right. Oh my gosh.
Because of his relationships with the trial bar and just some of his philosophical beliefs about the industry and litigation.
Is he out of the legislature?
No.
He's out of the
He's
legislature.
out now.
Yeah.
Okay, so 30 seconds each.
I think we got one.
Just 30 seconds.
Thanks.
I'm hanging out with Kaufman Rosswell. Ladies here, we're talking, can you just share in 30 seconds what some of those solutions that are being proposed would be, so we can know to back them up?
That's a good question.
So
That's a great question. We don't know. We're gonna
So number one is you have to do away with the one-way attorney fee statute here in Florida. It was meant to level the playing field for homeowners against, their insurance company for the purposes of litigation, but it's been turned on its head by court decisions and perversely used, so it has to be done away with.
We're one of the only states that has it.
We are.
Louisiana, maybe. have a little-
We are one of the only states in the country that has a one-way attorney cost shifting statute the way that Florida does. Two, I think you need to provide more flexibility to companies to alter and change forms to tailor coverage to what people need. It is like the state of Florida is so unbelievably restrictive in what policy forms admitted carriers or regulated carriers can offer. I think that at that point you have the opportunity for companies to find ways to provide coverage to homeowners that currently there's just you have to fit in this little box. So that would be two of them. I could probably go on for more, but I don't have 30 seconds.
Thank you, Kyle. So 30 seconds, something you want us to know that we didn't cover. Gary?
Well, first thing I said was I want to thank Kyle for being here, because this is just incredibly important that I may have said earlier, but I'm saying it again, that people here have a voice in Tallahassee, and that our gay delegation is able to communicate what the issues are. Because we can't do this, we can just tell you horror stories sitting up here. We need help from everyone in the chambers.
Okay. Scott?
I would say educate yourself both on your coverage as well as what's going on in the industry. We had a governor's race. One was promising reduced premiums. The premiums are the symptoms. It's not the problem. So there's a lot that goes behind that. So ECA, educate, communicate, and advocate. So that's key. Just know what you're purchasing. Do your due diligence on your insurance carrier through Demotech, AM Best, any of the rating companies.
And Sarah?
I think my advice would be to,
On your insurance.
Don't tell your agent.
I would say,
You're gonna get a lot of hugs.
I would say, read your policy. Read your policy, start at the back, go to the front. Look for every but, every comma, and every however. And the other thing is pack your lunch, because it's gonna get worse for the next 24 to 36 months. And then hopefully we can dig our way out. And I'd say, if we couldn't have, multiple storms in like a 3-week period, that would
That would be helpful. Right.
Well, look, first of all, let's give all of our participants a big hand. Vicki, you'll get all this fixed in the next 30 days.
Next 3 weeks.
So, guys, I want to start it on time, I want to finish on time. This is the beginning of a journey. This is the beginning of us gathering our information to be sure we're educated on this issue. We will continue to move forward with this, and I think, Alfred, it would be fair to say the chamber will take an advocacy position on this that will be well communicated to its membership and the community at large. And we will engage you as we need you to help, because we will need your help too. So, Alfred, anything else you want to add?
No, thank you, everybody. Thank you for all experts, and I think we've taken copious notes. I know Tanya has.
The corner reporter has it all.
All right, no, we're okay. No, this is very good, like you're saying, Jay, this is a conversation we can do because we're right in the middle of putting together our legislative policy agenda, and we want to go up there with solutions, right? That's the problem.
Right. We'll stick around for a little while if anyone wants to talk to us up at the front. We'll be around. Thank you for coming, and we'll be in touch.